Earlier today, serial entrepreneur Elon Musk announced a major purchase of Twitter stock, sending Twitter stock, TWTR stock, up nearly 30%. This is making investors wonder, could this be the beginning of a Tesla-esque rally for Twitter stock? In this video, I'm going to talk about Twitter's underlying business fundamentals and what do I think the business could do from here and sort of the upside potential. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did not own shares in Twitter TWTR stock. And so the news itself is that Elon Musk bought about a 9% stake in Twitter, worth nearly $3 billion based on Twitter's closing price, now above $3 billion as the stock price has rocketed higher. And so it's interesting. Elon Musk was tweeting about Twitter just a couple of weeks ago, last week. Given that Twitter serves as the de facto public town square, failing to adhere to free speech principles fundamentally undermines democracy. What should be done? Is a new platform needed? And he continued, it's time to seize the memes of production. And so this makes, investors wonder, or maybe it's just speculators hopping on board and, what's the potential that Twitter gets into orbit in the near future? That this is not just a 30% bump. Could this be part of a sustained huge Tesla-esque rally going up hundreds or even thousands of percent? Now, I've done two prior videos of sort of an interview with my friend Edwin Dorsey, who's a Twitter megabull. So if you want to hear the 10x case, check out those videos. So let's dive into Twitter's fundamentals right now. What do I personally think of the stock? Whenever I think of it, the first thing that always comes to mind is Mark Zuckerberg, who once described this little social media competitor, Twitter, as the clown car that accidentally drove into a gold mine. But when you look at their results, the reality is they've done fairly reasonable recently. You look at their fourth quarter 2021 results, you're looking at very reasonable growth. Look, it's predominantly an advertising business at this point. You see the fourth quarter, 1.4 billion of their 1.6 billion in revenue was advertising. So the vast majority, but they do have slightly under 200 million from data licensing and other revenue. In the fourth quarter, they were GAAP operating profitable, which is really saying something. So they were at 11% margin. The prior year, they were at 20% margin. On a full year, they were still unprofitable because of some legal expenses. But you're still looking at a platform that is still growing, not only on a revenue basis, it's profitable, but also on the number of daily active users, DAU. And so you could see how that's up from around 192 million last year to around 217 million in the fourth quarter, and the vast majority of which is international, only around 38 million users in the United States using Twitter. Now, they've launched many new initiatives to drive engagement and growth for the years ahead. This includes e-commerce, Twitter Blue subscription to, let's say, remove ads and make it a better experience, Spaces, professional accounts, super follows, tipping. And they've also made several acquisitions to increase their value proposition for creators. For example, they bought a company called Review, which makes it easier for writers and publishers to send editorial newsletters. This is very similar to the appeal of looking at something like a Substack, except it's directly integrated with Twitter. And when you compare where Twitter is in terms of size versus something like Facebook/Meta, which in full disclosure I own, and they report daily for their family of apps, they talk about a daily active people, which is equivalent to daily active users, of 2.8 billion users. Just think about how many people that is versus the nearly 220 million for Twitter. That could suggest that there's huge potential over time. Now, that said, Twitter has been around for some time, so they are going to have to change their strategy. You do have change of leadership, a new CEO in place. Jack Dorsey's out, and I did a prior video on that. And so it does raise this question of, could they execute on growing to be something more like Facebook, where instead of having only 200 million users, could they be at 1 billion? And that would be, 5x from here, just on their business. And it's clear that they do have these aspirations to continue growing, to recognizing that they need to increase the velocity of development, new features, to increase the number of users from 220 million to 315 million by the fourth quarter 2023. They're saying, look, we expect to really, push on the gas pedal. Now, keep in mind, this is from their Investor Day 2021, but they haven't really changed their expectations. They're still expecting significant growth on that path and more than double the total annual revenue to around $7.5 billion in 2023. This is versus, around $5 billion plus in most recent fiscal year. So the question is, where does Twitter stock go to from here? I try to look at things over a 5-year time frame along with my own personal take. If you're interested in finding new investments for both good times and bad, or you'd like to follow along with my personal financial journey, go to unraveledinvesting.com, click Join the Journey, where I write a weekly letter sharing a bunch of different thoughts as well as my own personal investments. We also have an exclusive community on Discord dedicated to learning and trying to find exceptional companies. So once again, unraveledinvesting.com, click Join the Journey. And so as we look at Twitter stock, first of all, their valuation, given that the stock has really gone nowhere for the last decade, during that time, what you had is you saw the fundamentals grow. And that's actually what I really love to see with a stock. I love to see a stock price that's flat, doesn't go anywhere for a decade, while the fundamentals each year incrementally get better, 10%, 20%, 30% growth. And that's what I like to see, because that ultimately translates into getting a less and less demanding valuation. Previously, this was a company trading at 40 times sales. Now it's trading at 6 times sales. This is a much more reasonable valuation for a company that's growing, let's say somewhere between 20 and 30%, and has the potential to continue executing and growing at that rate in the years ahead. That's the question, can they continue to execute on it? The part that holds me back here, that gives me pause with Twitter is, when you look at various different surveys, for advertisers, and keep in mind, you need to understand something about Facebook and Twitter, TikTok, which is at the end of the day, the users, you are the product. You are not the customers truly of these business models. These business models, they're looking for advertisers to spend. Those are the customers of these businesses. So Twitter's real business, as I already talked about, the vast majority of the revenue comes from advertising revenue. So their business is finding folks to advertise, and the advertisers need to get an adequate return on investment. So that means an adequate click-through rate. That means they're showing advertisements that are applicable to the user base. And this is an advantage for a company like Google, which I also own, like Facebook, which I also own, because they have so much scale. It's easier to say, hey, I'm getting a better return on investment with platforms like that. And that's what you see across various different surveys, that Facebook, Google, Instagram, YouTube, those generally get much better return on investment for advertisers, whereas the smaller players like Twitter, not so much. And that is a challenge for them. So we will see how that continues to play out in the years ahead. But that's part of the reason I'd argue that they have not grown to the size that you see with a company like Facebook or like Google, is partly because that return on investment for the advertisers isn't as compelling. So that is something that is worth understanding. Now, if they're able to engage users and grow that user base significantly, that could partly change the dynamic here for advertisers getting a potentially higher return on investment. It is something to think about, however. So as I look at the current price, around $50 a share, that's where it is today, as the stock's rallied nearly 30% on the news that Elon Musk, is coming in. Who knows what sort of magic he brings, to the situation. Is it possible that he's able to dramatically, change things up or accelerate the business from here? He's considered a free speech maximalist, I would think. And so it's all about, hey, let's make sure this public town square is, we're not inhibiting people from posting pretty much anything. And so looking at this, it's now around a $45 billion market cap, maybe a little bit more when you consider some of the dilution that's there. You look at the business, if you look at 2020, their growth was only around 7%. They did have some nice acceleration in 2021, now a little over $5 billion in revenue. They're guiding to around 20% plus growth. So I'm penciling out 20 to 30% growth this next year. They haven't shown consistent profitability. You see it in like the fourth quarter, which is a major advertising quarter. But, longer term, this business does have around 70% gross margins around that. So could they have, let's say, 25, 30% profitability longer term? Quite possible. You look at something like Facebook, and their core advertising business has something closer to 45 percent margins around there, 40 to 50%. And so here it is. This is giving a little bit of a haircut to what it could be, let's say 25 to 30%. The real key question with Twitter is, what do you think their growth rate will be in the years ahead? And what do you think that end multiple could look like? Because arguably, if you're looking at it only growing at, let's say, a mid-teens growth rate in the years ahead. Now, keep in mind, this is they issue significant amounts of stock each year, hundreds of millions of stock-based compensation. And so my growth rate is effectively the growth rate on a per share basis. And so I'm trying to use a lower growth rate because you're getting diluted each year as well. So that is something to consider as you're considering what this could look like in the years ahead. And so, looking at this 15 to 25% growth, if they're only at 15%, and if they're, at 25% profit margins, which they're not right now, they really need to get that for the full year. Let's see them do it. And they have a 20 times end multiple 5 years from now, then effectively the stock is break even over the next 5 years. But if they're able to prove, let's say they're closer to 25% annualized growth from here, then you'd probably get a higher multiple, and there is that chance, the possibility for over 100% upside. Now, keep in mind, this is a hypothetical framework. Stock prices go way higher, way lower. A lot depends on the execution from here. You have new management in place. Who knows if Elon Musk's going to bring his own magic, to the setup here. Maybe he'll, want to put in different type of leadership that could, reaccelerate the business. So I'd say a lot depends on sort of the vision from here. Can they further accelerate it? Or will they at least maintain really high growth for, let's say, the next 5 years? And at this point, when I see the lower ROI, lower return on investment for a lot of advertisers versus the mega platforms, it does give me a little bit of pause, but they are launching a lot of different initiatives that could potentially lead to this growth. So I just don't have the conviction yet to say, oh yeah, go all in, or I'm going to start buying Twitter stock. I see the optionality. I see why it's potentially interesting. I see the potential to go up 100%. That upside potential that I was just talking about of effectively being flat to upside of 100% plus around 140%, that depends on the execution. That depends on the sentiment. If you have, let's say, a recessionary environment and advertising driven business, I would expect could get hit. And you saw that, arguably in their 2020 results where they were only growing single digits. So, and that would also weigh on their valuation. So there's a lot of different components to think about it. I'd love to hear your thoughts if you think Elon Musk's purchase is going to be able to, add the magic, the Musk magic that can take, Twitter on a Tesla-esque rally, into orbit, to the moon, that type of question. Could that happen with Twitter stock now that Elon Musk is putting down a few $1 billion to buy into Twitter stock? If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button, and thanks so much for tuning in.